Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to you. In today's episode, I want to discuss the dreaded word, which a lot of people are talking about once again. Yes, so that word is popping up a lot again. So I have a little chat about that and follow on from a couple of stories we did this morning as well. But before I get to that, don't forget these little episodes or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So before I get into what I really want to talk about today, briefly, don't forget ECB President Christina Lagarde is currently speaking to, actually sort of testifying, so to speak, to the European Parliament. Now, I have my trusty phone with me, so I can keep an eye out in case there's any sort of statements or comments she makes, which might potentially move the market. And obviously, if anything like that does happen, of course, I share it with you live on air as I'm talking. So I'll be keeping an eye on that. I think, mainly she's going to be pressed a lot in this sort of on this occasion about what sort of tools they're going to use, their safety tools. They said they were going to emergency safety tools. They said they were going to use the spreads about amongst the bonds, of course, how she's going to control that, and interest rates, obviously, and how they can fight inflation. So yeah, if anything happens while I'm on air, I'll keep an eye on it and I'll let you know. But anyway, let's get on to the main bulk of today's program. And that's right. Unfortunately, the dreaded R word is popping up again. The R word, obviously, is recession. In a survey, actually, recent survey released by the Conference Board, it said, or it revealed that 60% of CEOs expect a recession by 2023. 60% of CEOs, according to this survey, expect a recession by 2023. So that's really good news, isn't it? As well as that, strategists at JP Morgan have said that due to the S&P 500's recent decline, it implies that an 85% chance of a recession. So JP Morgan believes there's 85% chance of us falling into a recession. And as well as that, models from Bloomberg's economics. Now, when I say models, I'm obviously not talking about fashion models, obviously. When I talk about, I'm not talking about that. Models, which I mean is these programs, obviously, which quite a few people use, Bloomberg being one of them, who tries to predict what might happen in the future. So these models from Bloomberg's economics suggest the risk of recession has now soared more than 70%. So yes, it's all again looking a little bit gloomy again, isn't it? So yeah, so those are the most recent things in reference to the dreaded R word. So how's the market acting today with this more chat about recession again? Well, to be fair, risk on and risk off. It's fairly tepid, and we'll go through my charts in a bit to have a look at it, because don't forget we have the US is closed today, so it's fairly tepid. But we'll have a look at see how the market is doing in general in a little while. But one thing I want to bring back up is what we talked about this morning, and which remains under pressure, which is Bitcoin. And I'll pull it up on my chart in a minute. In fact, Bitcoin is almost down about 70% since it hit its high back in November 2021. So yes, so Bitcoin is feeling the strain at the moment. Like I said this morning, it is above 20,000 again. We'll have a look at it in my chart in a moment. And after dropping down to 18,000 over the weekend, so it is off that low, but it is struggling to gain any momentum past the 20,000. Thank you for the like. Thank you. 20,000 mark as it stands. In fact, some analysts, it's not me, it's not what I'm saying. Some analysts actually think that Bitcoin can even decline further and maybe hit the $15,000 level, $15,000 level. Bitcoin's decline really down is to obviously risk aversion, so risk off. Okay, the fact that it was pitched as being a hedge against inflation is not being looked at by the market anymore, that it can be a hedge against inflation. And obviously the recent turmoil with the other cryptos and some of the cryptos exchanges. Remember Coinbase was letting go and a good percentage of its staff a few weeks ago, it announced. Then of course, obviously we had Celsius with that issue with canceling withdrawals. So all this momentum is not helping Bitcoin at all. But let's have a quick look at it and see where we are with it at this moment in time. Okay, like I say, mainly because of the fact that the US is closed today, we haven't had much momentum. We're still hovering around $20,443. Okay, it's finding a little bit of support around the 50-day moving average here, if you can see it. So it's finding a little bit of buying around about 20,355. It's held for most of the session. Okay, but like I say, it is still under pressure. It's really struggling to get the momentum back again. It did try to move higher earlier today and get back above 20,000 to 21,000, but it lost momentum around here at 20,980, $928. So that's where it's capped at the moment. So yeah, it is fairly pressured. Whether it can go down to 15,000, it depends how many Bitcoin bulls and enthusiasts we still have out there at the moment in time. Something else I want to talk about as well, which is oil. Oil is under pressure, okay? Again, because of the dreaded R word, because the way the market is looking at it, we do indeed hit recession or have a recession. The demand for oil will start to decline. So we are seeing oil, sort of being sold off, not dramatically, not as much as we all want it to be. So our petrol prices could start going back down, but it is dropping. And I'm going to pull it up on my chart now as well. So that is also under pressure currently as well. So we can see if we bring oil up as well, US also, this WTI currently trading under the 50, under the 100, and under the 200-day moving average, currently trading at $108.22 a barrel. As you can see, though, like I said, because the US is off today, it's fairly tight, in a fairly tight range at the moment. If we look at Brent as well, Brent is down $111 a barrel now. Again, under the 100, under the 50, under the 200-day moving average. RSI is in the middle as well, so not showing signs of either being overbought or oversold. And again, because of the US, it is slightly quieter. And it's like I say, so it's trading around $111.46. Okay, so yeah, that's oil. The other thing I want to quick look at as well, and this is interesting, is natural gas. Okay, this is on a 30-minute. Gas is also feeling the strain, okay? It's actually trading at 6.661 currently at the moment. Again, under the 100, under the 50, under the 200. But interestingly enough, it was sort of spoke about today because obviously the gas issue in Europe from Russia, because of the war in Ukraine, Germany are beginning to open up its coal-fired power stations. So looking to go back to coal. Not great for the environment, obviously, but I feel because they have the gas situation, they're looking to open up their coal power stations again. So that is quite interesting. So that's obviously going to have an impact potentially on the demand for gas as well. So let's have a quick look at some other things, how the market's been feeling in general. The cable, the British pound, US dollar, let's look at that first. Okay, yes, we're still trading, again, 1.2232, above that area of interest, which I was looking at, which is 1.2197. Again, fairly tepid. It seems to find a little bit of buying around the 100-day moving average. It's above the 50, though, and it's above the 200 as well. Interestingly, though, don't forget that is now, because like I say, it's holding it up at the moment as a potential area of interest as well. But that's something worth keeping an eye on. And again, it's fairly tepid. Nothing was said by those two members of the MPC, which I mentioned this morning. Nothing of any real value to drive the market. So yeah, we are very sideways. Euro, though, let's have a look at the euro, because that's interesting as well. Yes, we're back above 105. Okay, currently trading 105.14, above the 100, above the 50, above the 200. Let's see if Vanguard has said anything. anything at all. See if we got anything coming through. Give me a second. Give me a second so I can check if she said anything, of course. Obviously, nothing of real importance because we're not seeing the euro really move. So, yes, nothing really there. Let's have a quick look. Okay. Okay, one thing. We intend to raise rates by 25 basis points at our July meeting. That's what she's just recently said. But we knew that anyway, don't we? So that's not really a shocker, is it? Yeah, anything else? Euro area activity being dampened by high energy costs. Yeah, we know this as well. Price rises are becoming more widespread across the sector. Underlying inflation. Yes, we know this as well. We expect to raise key interest rates again in September. Again, this is nothing new. It's everything we know. Like I say, she is, in my opinion, very much a dove. So yes, the euro, nothing really moving on that. If we have a quick look at equities as well, European equities up slightly higher today. So yeah, like I say, slightly buying off. Not surprising, really, after last week's absolute massacre. We're seeing a little bit of buying. Again, that's with the FTSE. We look at the Dow Jones as well. Okay, very tepid, but it's above the 30,000 level again. Above the 30,000 level again. So yeah, that's where we are at the moment. Like I said, the US is closed today. Lucky people, they're having a holiday, a bank holiday, so they're closed. So I do expect to be quite thin trading for the remaining of the session and today as well. So it's going to be quite tepid. But don't forget, we still have a big week ahead of us. We have Canadian retail sales, Bank of Japan minutes, GB, British pound CPI, CAD CPI, Fed Powell is testifying, German manufacturing PMI, UK service PMI, and US initial claims. So a pretty big thing coming up this week. Sorry, excuse me, my throat's getting really dry. It's really hot today. I haven't decided what I'm going to watch along to yet, so I'll be announcing that tomorrow. Most likely, I'll be probably looking at either the Canadian PMI, Canadian CPI, sorry, initial claims, or maybe the services PMI. Maybe initial claims, because I think the job market is quite interesting. And don't forget, last week, initial claims came in higher than expected, and we saw dollar weakness on the back of that. So I might do it for that one. That might be quite key. But I'll let you know tomorrow. I say we always look at the FTSE, which is up 1.54%. DAX is currently up 0.48%. Eurostoxx is currently up 0.23%. So there we have it. Don't forget, you can ask me questions anytime you wish. This is what I'm here for. So please never hesitate to ask me any questions whenever you wish. And is there any questions at all? Anybody like to ask me anything? No? Okay, not a problem. Not a problem. Okay, not a problem. Don't forget, I'm back online tomorrow, okay, at 8 a.m. UTC. And again, tomorrow at 1 p.m. UTC. We should have a lot busier day tomorrow. I think tomorrow will be quite a lot more exciting, and there'll be a lot more to talk about than today. If you're watching me on Facebook, don't forget, and you like it, you can follow us if you like. If you're watching me on YouTube and you like it, you're liking these little series, subscribe if you want, if you want to. Click the notification button so next time we're going live. If you enjoyed this episode and found it useful, give me one of those. It's nice to know it's liked. I've got a couple of likes already, which I really appreciate. It really does cheer me up. So I would love, I like to see if you're liking it. On that note, till tomorrow, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, tomorrow morning, every single one of you, trade safe.